All right, so in this video, we're going to talk about the 5 different types of mortgage loans that are available to you if you are purchasing in the state of South Dakota, specifically for your first home here. So there's 4 different types that are available within the South Dakota housing loan programs. And then there's another type of loan that we'll hit on here at the end. So those 5 types are going to be conventional financing, FHA financing, USDA rural development, VA financing, and then the 5th is what we call a portfolio or an in-house type of a loan program, and we'll hit on that one at the end as well. So as I mentioned, the first type is a conventional loan, and this is probably the most popular type of mortgage loan, maybe the one you've heard about the most, but this is typically geared towards an individual or individuals who have a little bit stronger credit history or credit scores, typically a little bit more of a down payment, and your budget or your debt to income ratio is typically a little bit lower or more conservative. So if you match those 3 criteria, a conventional loan is probably going to be your best bet. It's typically the least expensive on the fees and the upfront funding fee, mortgage insurance, all of those items that we'll get to in a little bit more detail. Conventional loan is typically going to be the most economical way to go. So on a down payment, it's going to vary quite a bit, anywhere from 3% down. Then it goes in buckets of 5%, 10%, 15%, and ultimately a 20% down payment is going to give you some of more favorable terms. The reason those down payment amounts matter is what's called PMI insurance or private mortgage insurance, which is a fee included in your payment. That fee gets a little bit less expensive the more you put down. If you put 20% down as a down payment, then you avoid that altogether. So the one thing to keep in mind with these first 4 programs is these can be combined with the South Dakota Housing Development Authority's program, which include things like down payment assistance and some other perks that we'll get to in the next series here as well, or the next set of videos. So conventional financing, if you've got a great credit score, a conservative budget, and some sort of a down payment, probably going to be one of your best options as far as financing goes. Second type of loan is what we refer to as an FHA loan, and that is geared typically towards someone whose credit score might not be as strong. Maybe your budget or your debt to income ratio is a little bit less conservative or a little bit higher number, or you've got a very limited down payment. That is typically going to be more favorable to go with FHA financing than at that point. So the good news with these different types of financing, you don't have to have a specific type picked out when you apply for a mortgage. Typically, your lender or your loan officer will walk you through these, help you determine which one's going to make the most sense for you, show you the pros and the cons and all of that, and help you pick out the best mortgage loan for yourself. So just keep in mind, FHA is typically geared towards someone who doesn't quite fit the box of conventional financing. So the next type is USDA, what we call rural development or guaranteed rural housing. The USDA program is available. It's based on geography, and then there's some income limits based on the size of the family or the size of the number of people living in the home. This program is not available in the city limits of Sioux Falls or the city limits of Rapid City currently. And that can change from year to year. It hasn't changed now for a few years. So if you're looking inside the city limits of those 2 communities, probably not going to be an option. There is a link that we'll include in the description below that you'll be able to get to find out if your particular area is eligible for USDA financing. And you can zoom into the neighborhood and all of that and see exactly if the property is eligible or not. So why would you want a USDA loan? Well, the biggest perk or benefit to USDA financing is there is no down payment requirement. So you can get 100% financing. You do not have to make a down payment, obviously. And the options for the, they call it the annual fee, which we referred to as like mortgage insurance before. USDA's version of that is less expensive typically than conventional financing or FHA financing. So long story short, if you're not looking in Rapid City or Sioux Falls and you fit the income limits for the household size and a few other criteria as well with USDA, that might be the best option to go with. So again, you don't have to know exactly which one is going to work for you, but that is one that your loan officer or lender should go over with you as well if you're looking outside of those areas. And then the last of the four big types is what's called a VA loan, or a Veterans Administration loan. And this is for those individuals that have served our country, either a veteran or if they've got some service with National Guards. There's a whole lot of criteria to look into that. Don't want to get into all the details, but if you've served, make sure you know if you're eligible for a VA loan, and then you're definitely going to want to look at that as well. Biggest perk of a VA loan, you do not need a down payment, and they do not require you to pay PMI insurance, the mortgage insurance, or an annual fee. So your monthly payment with the VA loan is typically, most times, going to be less expensive than the other three types. Obviously, you have to be eligible for a VA loan. So keep that in mind if you are eligible. There are some additional perks as well, where you might be exempt from the VA funding fee, and South Dakota Housing the program allows veterans to qualify again as a first-time homebuyer, even if you're not, if you're a veteran. So if you're a veteran or you've served the country, just make sure you ask your lender or loan officer about that. So those first four types are eligible for that South Dakota Housing Development Authority's first-time homebuyer program. So South Dakota Housing or the South Dakota First-Time Homebuyer Program, those first four types you can partner with the South Dakota program, get some perks on down payment assistance, a tax credit, some other things, and that's those things can be lumped together. The last type of financing is what's called a portfolio loan or an in-house mortgage. It's kind of the slang term for it. And that simply means that the bank or the institution you're working with is not going to place your loan in the first four types. They're going to do more of the traditional old school way of underwriting or looking at that loan. And if it makes sense, they'll likely approve you. And if it doesn't quite make sense or there's perceived risk, they might not approve your loan. So this is typically for someone who maybe started a business recently, has a unique income situation where maybe on paper something looks off, but in reality it's actually quite stable. Just the unique situations of usually self-employed is probably honestly the biggest one, but anything unique with income, assets, maybe a credit history that has some blemishes, but there was a perfectly good reason for it all, and it just makes sense type of lending. So you'll want to check if your institution has that as well. And that might be a good fit if the first four don't fit for you. Typically, you're going to need a little bit more of a down payment. It's going to vary tremendously depending on your situation. And typically, it's going to be on more of a short-term loan. It might be on an ARM product, which is an adjustable rate mortgage. And it might be more of a, like I said, a temporary type of a fix to get you into a house of your own. So a lot of times you'll get into the loan or into the home with that type of a product, and then ideally refinance it into a permanent loan, which would have been the first four types we talked about at some point in the future. So hopefully that all made sense. 5 different types of mortgages: conventional, FHA, USDA, VA, and then the portfolio products. So in the next section here video, we're going to talk about the benefits of the South Dakota Housing First-Time Homebuyer Program, and then those first 4 types that we went through will make a little bit more sense. Keep in mind there are down payment assistance options, so even if you don't have a down payment, any of those first 4 might still fit for you and your situation. So hopefully you found that helpful. Let me know if you've got questions, and we'll talk to you again in the next one.